Hi everyone, it's Bagger. It is Tuesday evening, October 26th at about 10:22. Another pretty positive day. A little bit of sell-off toward the end, but all in all, pretty positive day for the bulls. But we do have some things going on here that we want to bring to everyone's attention. First thing is, though, we've parked some of our testing sites and we bring to the fore just the Nicholas timing model. And here it is. Here's this timing model, which is all important. Let's put the VIX in line here. Let's see if we can do it this way. There we go. We get the VIX daily component to the top, and it goes short on the 5th, up 4,600, and the rest of the other four markets all go long, also on the 5th, and they've been in that long position ever since. Now there was a little, little bounce. Not as smooth coming out of this, but there it is, $44,000, one mini contract in that signal. It's turned out to be a big signal, and let's see how much further it's got to go. Maybe we look at the volatility. What volatility? Nothing in the futures, in the fear gauge. Here on the 9-day, we got a little hint, just a little hint, but not much of anything right now. Market breadth. Decline has led advances a little bit. So the advancing issues did dip. Declining issues did pick up. So that tells us that maybe this bullish phase of this latest run is hitting a bit of a wall and due to come back. That's a hint. We look at the yield curve, and the yield curve is pulling in a little, nothing dramatic, skew. Now this is interesting. Let's get this over here. What do we got for skew? Skew, we got it at 141, still very elevated, but here it is here, not where it was over here. When this skew got up into here, actually that is the skew. That was kind of, and you can tell how long it took for that to get into play, but we're nowhere near where we were. Still pretty high. Let's go look at the daily view of the futures. By the way, we haven't commented on this. This gives us the intraday goal of futures. This tells us if we're trading intraday, how much money would be reasonable to be making on a mini contract. And you can see the volatility has come in. We're at 700 on the Russell, ES 700, 1700 on the NQ, and the YM just 461. So it has come in. We've seen the NQ get as high as $7,000 or $8,000, and you can do the same with the rest of these markets. Whereas nat gas is pushing close to 2,000. So that's what tells us, nat gas could be an interesting market to be trading intraday. Whereas, some of these other things like the 2-year bond, $90, I don't think so. The trend is firmly in place, though, firmly in place. So we're going to give you the trend through the eyes of Swing Machine on all these markets, and live cattle getting on its horse again. Over we go, and up we come. And there we have it. Still right in the middle of the river. Can we go higher? Yes, we can. But let's keep moving. Let's see what else we see. The ES on the hourly is dipping. It's been long for 214 hours, so a little long on time. NQ dipping. The Russell went short. And notice the VIX. 9 hours ago, the VIX goes long. So this is a little problematic. It's only the hour. Could dissipate overnight, or we could wake up in the morning and these markets could be on their arse, and we will look back to this long VIX. It is strange that, that this market, particularly the NASDAQ, was raging higher in even the ES, and the VIX was not going down. So we have that contrarian play, that divergence, and we have on the hour the VIX going long. So I think it is noteworthy, and we did put on some counter trades toward the end of the day. Actually, we did a little in the morning too, Susie and me. We did that in our options work. We're staying pretty liquid to exploit the opportunities we see during the day with our futures, but we did get a few options on. Sentiment radar. Here's the VIX. Markets were higher, coming in a little bit, and down we come. So the play for us would be long VIX, fade the markets, and actually be a buyer of treasuries. Not a popular position, that usually isn't. And I think oil in the energy sector is likely to come in as a trade, just as a trade. And here is live cattle pushing further out. Probably got more room to go. Let's go look at the daily ETFs for those that have IRA. Look at that. They're fat and happy. Everybody happy, happy, happy. They're going to get them out shopping and spending some of that cash. Look at that. All green. And over we go. And up we come. Primarily center cut, but it is what it is. Let's go to the sentiment gauge. Here's the ETF. We got the panic side and we got euphoria. IYT, transports are in euphoria. Everything else is too. Look at that. Just everything. So it's pretty strong still. Pretty strong. Keep an eye on that VIX. It's ripe for a pullback though. Ripe for a pullback. No one's expecting it. We are. And let's go right to our sentiment gauge here for stocks. So here is the most extreme stuff, strongest, most extreme. There they are. That's the stuff that's likely to come in. And if you want to continue to try to get some calls on, some of this stuff here is likely to bounce. And here, that's where I'd be looking for a bounce. We mentioned PayPal the other day. It generated 7 or 8 points, pulling back. Lockheed Martin down 43. I don't know what that's all about. CMG, Chipotle Mexican Grill, down 26. And let's do the same for the NASDAQ 100. NVIDIA, horse, iSurge. Look at that. Here are some more. And Intel. Then, of course, Facebook, which will probably get a bounce here in the next couple days as a trade. So we're just as a trade. Let's look at our Rinko view. We're up in here. Probably needs to get up into 4,600. We're just shy of it unless we gap down in the morning. And if we do come back here, where might we go? Well, the first stop is going to be here at 44.52. So that's only about 25 points. More likely to come back into here, 44.61, which isn't much of any. Well, actually, it's 100 some odd points. And does that hold? We come ripping back and get under it, then, we got them trapped. But it's likely to come back, check, throw back, test, and then we get, that proverbial ABC structure if we're going to come back. If we're going to, I'm sorry, I kind of messed that up. I think that was right there. And let's look at a traditional view of a chart. Now this is the SPY. I didn't expect this to have it here, but check this out. It's kind of interesting. So that's a little bit of a inverted hammer candle. Let's bring this down and look at it. I like that type of thing. That's exactly where you'd want to see it. A little inverted hammer. See the %B headed down? This is a false high. So what we need to see over the next 3 days, that low, 455.56 to the penny. If we take out that low in the next 3 days, you'd want to fade it and set your stop above that high. 458.49, right above it. That's a signal candle. And you can see that we came down on heavy volume. We've gone back on next to nothing. So that is a signal that we're likely to come in. May take a little bit. There's still, that momentum, but that's what it's telling us. Let's just look at a weekly view here real quick. Yeah, depends how this week finishes, but that's what it looks like to us. Signal candle on the daily. And how about the VIX? I think the VIX is giving us, there it is. So here's the percent B moving up. The VIX is underneath. Okay, this is true low territory here. We're lower than that. We're lower than that candle, which was 20. We're under that, yet the percent B isn't. Percent B, VIX looks like it's going to pop. VIX going to pop. Market's going to come in. So we're positioned. It's early in the week. It's only Tuesday. So this week could fall apart. End of October, it could. At least for a pullback. Brick size, we don't need that here. Pebble Beach reversals. Let's for signals here. Here are some Pebble Beach buy signals and sell signals. I'd be paying particular attention to the sell signals. These would have lit up intraday today if you had this on your desktop. Beautiful, beautiful tool. Great tool. And out of bounds marker. Here are some short signals and some buy signals. All of those deserve a look. If you're looking to do some option work or some stock work, that's what those are. Those are opportunities each and every night. That's where I would be going. That's where we do go. Let's look at our put and call machine, and we're right above all the averages, just like they're on some sort of machine, like the markets are on a rope. Oh yeah, I'm sorry. Everybody's still on I-10, I-95, I-5 on their bag phones, calling their brokers at Merrill Lynch. Get me some more stock. Sure they are. No, they're not. They're pushing buy and sell buttons their entire IRA. Move $500,000 in the S&P. Okay, we're in, honey. Oh God, how about those targeted? Someday I got to explain that story to some of the new folks. The targeted date funds. What a scam that is. And I don't know if you know this or not, but some of the new people may not. When I was in the workforce, 2000 prior, when you joined a new company, you didn't automatically get enrolled into a 401k. You do today. You do starting in 2007, 2008. Automatically. You have to sign something saying, I don't want in. And they throw them into these targeted date funds. And of course, those targeted date funds, the ETFs, when someone joins, goes to work at 24 and they're going to retire, at 60, and, it's going to be whatever it is, 2052. And they put them in, oh, you're going to get in that targeted date fund of 2052. Well, the strategy on the 50, targeted ETF fund, the strategy for the 2050 is the same as the 2040, the 2030, the 2025. And that is, you send me money, I buy stock. You ask for money, I sell stock. That's the extent of the money management. It is the biggest marketing Wall Street scam. But, the people have bought it. Like everything. All right, let's see who's rocketing. NVIDIA, UPS, Cody. So these guys here, they could continue. This is strength, so you may not want to get in front of any of these per se. But this is weakness, this group. They're not doing so well. Not doing so well. And with the market up at its high, let's just come in here, and out of the whole, we can take off 10. We're going to go down and look at the numbers, so don't let me make you dizzy. Let's come down here and show you out of the whole S&P 500, how many are over their 50? 323. The breadth of the market is not good. We should be 400, 450. Everybody should be in. Everything should be up over the 50. Plowing ahead. It isn't. It's that speaks to underlying weakness. Let's go out about a dozen days here. This tool here we haven't used in a while. Let's set this out to, let's do 13 days, which takes us out to like next Friday. This gives us the expected move. Doesn't give us the direction, but what stocks are expected to make, based on their pricing in the options market, the biggest percentage moves. Now, we're into some earnings, so some of this could be earnings. Here they are. So in percentage terms, up or down, we're going to show you the top 100 stocks between now and next Friday. And if you're playing options, this is where I'd want to be playing, because this is the stuff that's priced to move. So you want to take a look at those. If you want to do it in points, these are the stocks expected to move this number of points between now and next Friday. And notice Netflix is in there too. I don't know if Netflix has earnings. I think they already did. Yeah, so. And there is the top 100. Okay, so when we net this out, Nicholas is still long from the 5th. No concerns. VIX futures, no concern. Spot VIX, not much. A little hint, but nothing. Skew, elevated, same. Trends, solidly up. Market breadth, all the ETFs, they're all up. Everything's up. The market breadth has improved, but it's spurious. It's a little spotty, not as strong as the last time we're up here. So we keep going higher and higher with it not as much participating. And we do see a signal candle on the daily on the S&P, which is what we focus on. We do see a false low on the VIX, even a false high on the S&P. So we think we're prime to come in, to come back, to do some backfilling. You know, we don't know. You never know. But we need to take out the low of today. The S&P's low today. We need to take that out in the next 3 days. Otherwise, they're gonna keep pushing it higher. And if we can come back, the VIX on the hour has gone long 9 hours ago. So we could wake up to, you know, a nice gap down. That would trap a lot of people, and that would be interesting, wouldn't it? Be love to holding some options on that. I am. All righty. All right. Good night, everybody. Let's see what they want to do tomorrow. Good luck.